I get this question pretty often where people are wondering if they should sell out of all their stocks now, take the profits, and buy in later when the market crashes. I'm not a financial advisor or any kind of money guru, but I do trade recreationally. And yeah, it seems like a great idea for the jump, but let me explain why you probably should not do this. So, usually the market moves before the economy. Stocks have often already fallen and are sometimes even in a recovery state before a recession is even officially announced. The 2008 recession actually began in December of '07, but people didn't really understand how bad it was going to be or for how long it would last. In 2020, stocks crashed before the economic data existed to tell us that we were in a recession, and it started recovering even when unemployment was high. In both cases, the market bottomed out months before economic conditions improved. The fears of a recession are already here. It's possible you already missed the bottom, and it's possible the bottom never ever comes. You can miss out on some really great returns if you sell out. Some of the best days for stocks are literally singular days, and you could miss even bigger than expected returns, a surprise rate cut, or some kind of government stimulus that lifts up an entire sector. You can really miss out on some dramatic returns. Most of the market's biggest up days occur during times of extreme fear. Now is not the time to panic sell. Also, not every company and industry is hurt by a recession the same way. If the market goes down like 20% or whatever, it doesn't mean that every stock or even every industry is affected equally. When we go through an economic crisis, things like travel banks, consumer discretionary funding, and luxury goods can be absolutely walloped, while other industries like utilities, healthcare, telecom, and consumer staples can do all right. Just sitting on your cash is also surprisingly risky. Your dollar is inflating every day, and even though everything looks really bubbly right now, the markets could continue to go up and up. So your investments could actually gain value faster than your cash loses value. It's really hard to get back into investing once you take all your money out. It took me several years to reinvest and take this seriously again, and I made a bunch of money between 2020 and 2022. Both the roads to the poorhouse and to hell are paved with good intentions. Also, the issue with taxes. I'm not a tax professional, but I know that selling stocks can trigger capital gains taxes. And I also know that I have to pay less taxes if I own my stocks for more than a year before selling them. You can delay gratification for just a little while so you don't owe the government more money. Why do you want to pay them more money? There are a couple exceptions, of course, like if you're in retirement or near retirement and a big downturn is really going to screw up your living situation, you might consider selling. If your portfolio is heavily concentrated on just a few stocks, especially if they're in really vulnerable sectors, you might consider selling. If the companies that you're invested in have some really stretched valuations and you don't think it's going to last and it's giving you a lot of anxiety, you might think about it. In those cases, you may be better off reducing your risk instead of maximizing your returns. But everybody is different. Everyone has different goals. But if you're young, healthy, and not completely broke, this may be a time to develop your patience. The sanest course of action is to make sure that you're diversified, investing when you can with what cash you're not going to need, and to have a little bit of savings just in case. You could lose your job, you could need a new AC unit, or there could be a huge crash in the market and you really want to buy in. You need money for that. There's a really good chance that your investments will go up and down over the next year plus. But if you don't panic sell, history suggests you'll come out ahead. The real challenge is keeping invested when things look topsy turvy. Everything cools down and everyone quits worrying about the entire system crashing. As long as you've beat a high yield savings account rate, you've won. You've done better with your money than the bank would have.